Hey guys, Mark here. Today is Friday, January 24th, and before we get into the trade of the day, I just want to say I am not a financial advisor, and everything in this video is for educational and entertainment purposes only. Before I show you guys the trade, let me talk to you guys about the strikes I took, why I took them, and how the trade progressed. So, we saw market open just a little bit above yesterday's close, and instantly it filled that gap from yesterday's close till the open today, right? And then it continued going up. Now around this level here where I usually start looking for my trade, I was thinking I don't think the market will have a very bullish day today. And if it does, right, I don't think it's gonna hold that bullish, because if we look at the week, right, it's had a very bullish week with multiple up gaps and continuations. So I thought, well, if it's going to go up, it has to create that upper wick on the weekly candle, right? And so I knew if it goes up, it's gonna have a retracement. And if it did do that, as long as that retracement is in our profit location, which is this gap between the upper strike and the lower strike, then I would profit. So that's what I was thinking on the upside. On the downside, I thought, well, if price reverses, it's going to reverse into this resistance area, right? Because it had this break, and most support and resistance traders like to trade break and retest, and this would have been a perfect break and retest and then continuation, right? And so that's why I picked this strike here. So this strike, from when I took it at 950 on this candle, was about 19 points higher, and then this one was about 20 points lower. Yeah. And so that was my thesis on the day. Obviously, we could see now that price went down, broke the lower strike, and closed in between the strikes, which should have rendered this a loss if I had held. Just like yesterday, if you held yesterday, you would have lost. But because we don't hold trades, we were profitable yesterday, and we were profitable today. Before I show you guys the trade, or how it went, I entered on this candle here. We saw price drop, and then from this point it just started ranging. And so I think it was right here we got out of the trade, right as it was about to hit 1110, or as it was ending the 1110 candle, we hit take profit. So it didn't matter that price went down here and closed in between. We don't. And if we hadn't hit take profit right here, we would have exited right on this candle here, which is still between our strikes, so we would have made a little profit, you know. Whether it was a little profit or break even, it doesn't really matter, as long as we're not in a loss, right? That's why we always exit at 1 p.m., latest 2 p.m. In this case, if you held till 2 p.m., you would have been closing in a loss. So let's go to positions. So here's the trade. These are the contracts I took, and we sold it for $155, right? Which means we got $155, and then we bought this contract back at $105, which netted us $50 profit on the day. So on $1,000, it's like roughly, I'd say 5%. Nothing crazy, but profit is profit. Either way, that was today's trade. So we are now 5 wins, 5 out of 5 on this account. So 5 trades taken, 5 wins, right? And January is about to end, so hopefully we can end January off in profit and with a 100% win rate. And then February we'll trade the whole month on this account as long as we can, right? We still have to abide by the pattern day trading rule. So we won't get the full amount of trades we should get, but we'll see how we end in February. And yeah, I'll talk to you guys next week. Monday we can trade, and then Thursday and Friday. So we will have 3 trades next week. Anyway, hope you guys have an amazing day, and have an amazing weekend. Bye.